Jan, good to see you.
Good to see you.
Is it inevitable that we will see a slowdown in retail hiring this holiday season, or will it be more selective? Department stores versus e-commerce, retailers operating or servicing the low-income consumer versus luxury. What do you expect to see?
It's already selective. You saw what FedEx said about what they were going to do. But we know they've got their own problems to deal with. UPS acts like it's going to be about like last year. Target said the same thing, same as last year. And Walmart's in a different spot, right? They hired 150,000 people last year, but they kept a whole lot of them on staff, and they're giving those people extra hours this year rather than hiring more people. And they've also become more efficient. So I'm not sure what they're telling us means anything other than what they've told us all along, is that they see a pretty good back to school and they see a solid holiday, and I don't think they've changed their view on that. And most retailers saw a solid back to school. And most retailers through yesterday will tell you sales were okay. What they're worried about is that they might not still be okay given a 75 basis point increase today and all the things, or yesterday, and all the things we've seen going into the consumer with what, 8% inflation, maybe that high coming through the back half. And so they're worried about it, but they're not seeing their customer walk away yet.
So as long as the demand story remains strong, hiring shouldn't be affected as much as perhaps some people are expecting. Which companies, though, could be next to warn? Based on their balance sheets, based on what we heard over the last couple of weeks during earnings season, which could be the next retailers, the next shoe to drop?
Well, there's already been a lot of shoes drop, right? Kohl's has had real problems. Gap's had real problems in their reporting. But we've seen, really good numbers out of people like Tapestry and Capri, and Macy's has been pretty good. We haven't seen those change. So when you look at those stronger, more aspirational businesses, they're doing well. We saw really bad numbers out of both Target and Walmart, but we know they're straightening out their problems, and they're going to have a better back end than they had front end in both cases. So yes, it's tough if you're dealing with the lower end, but I still expect Dollar General to do pretty well. I expect TJX and Burlington to do pretty well on the trade down. I expect Macy's to do well because they're the back to gift place, right? We're going to see better gift giving this year than we've probably seen in 3 years because the consumer's out there saying, wow, COVID's finally over, maybe I should go back to normal. And we know that they're attracted to gifts right now. So I see that as being pretty strong. And then when we get to those more aspirational ones that I named, I think we'll see good numbers out of them too. I didn't mention, I think Nike will be good. I still think that Boot Barn and Levi's will be good because the Western craze is still in and they've got a reasonably affluent customer. So I think the upper end will do well and the lower end will struggle some because of trade, the trade down in what people can afford to buy because they have to spend so much on food. But at least gas has come off of the $5 a gallon mark.
Mm-hmm. We had the FANG stocks, but I love your confection here. The watch stocks, Walmart, Amazon, Target, Costco, and Home Depot. Pretty much no matter where the customer is, they have won the game, you say. So that would be a good place. If I were trying to build my own retail ETF, it might be wise to just own those 5, right?
Well, I confess that was Jim Cramer's numbers that came out on watch. He's the one that created that. I adopted it because I liked it so much and I believe in it so much. But yes, absolutely. You could own those 5 for the rest of your life and be happy. They have won the game, right? They were essential. They got to stay in business. They reinvested in the business during COVID. They took market share, and they're not going to give it back. So when we come out the other side of this, whatever this is that we're going through with the Fed and inflation, these will still be the 5 big winners. I will believe that, and I'm going to be with that for a long time unless something dramatic happens.
Shepard Smith here. Thanks for watching CNBC on YouTube.